Rosha here. Let's get straight to it. Those record-breaking earnings from the semiconductor sector, it's a trap. What we're seeing is a classic liquidity rotation. Smart money is using the good news as cover to sell their positions. So in this briefing, we're going to break down this exit liquidity trap and map out exactly where that capital is headed before the US market even opens. It's the paradox that has everybody scratching their heads. The world's most advanced chip makers post these historic blowout earnings, and what happens? Their stocks get hammered. At the same time, capital suddenly floods into the beaten down, fundamentally weaker battery sector. Now, this isn't chaos. Oh no, this is a highly calculated mechanical maneuver. This slide right here, it just captures the whole conflict perfectly. On the left, you've got the very engine of the AI revolution, the absolute peak of technology. And on the right, you see the market's brutal verdict, a sea of red, right where all the good news should be. The SEOUL trading session just sent a powerful and, frankly, a pretty terrifying signal to the rest of the world. Let's decode it. Okay, let's really dive into this. The signal from the Asian close is crystal clear, but only if you ignore the headlines and focus on the data. The market's internal engine has totally shifted gears. We are now in what I call a good news kills environment, where positive catalysts are actually being used as the trigger for selling. Just look at this divergence. It's right there in plain sight. SK Hynix, the champion with record profits, saw its stock drop because the big funds decided we've hit peak earnings. Meanwhile, EcoPro, a battery company with, let's be honest, weak forward guidance, saw a massive plus 7.26% signal activation. This confirms it. It's not about fundamentals anymore. It's all about institutional positioning. And here is the hard proof. Foreign institutions dumped a net negative 1.7 trillion Korean won of large-cap stocks. They weren't buying the good news, they were selling into it, providing all the supply for the excited retail crowd. This is the number that tells you the smart money was heading for the exits. So how does this even happen? I mean, what's the actual mechanism that turns the best news of the quarter into a sell signal? Well, it's a structural feature of the market today, a playbook known as the exit liquidity trap. And it's what happens when a market is just starved for new capital. Let's be really precise here. Exit liquidity is that huge wave of buy orders that comes from enthusiastic investors the second a company releases amazing news. Now, large funds, they need this volume. It is the only window they have to sell off enormous positions at a good price without causing a total market crash. So the public's excitement becomes their own personal exit ramp. The whole process is mechanical. It unfolds in 3 stages. First up is the constraint. A fund has a strict rule, say, a maximum of 30% exposure to semiconductors, but after this huge rally, their position has grown to 35%. They are now forced to sell. Second, you have the trigger. The record earnings report hits the news and retail buying pressure just surges. And third, the action. The fund executes its sell orders, offloading that extra 5% right into that rush of buyers, all to rebalance their books. See? It's not emotional. For them, it's mandatory. So here's the crucial point. We're in a closed system. You got to think of the market not as a growing pie, but as a zero-sum game. This image is perfect. On the outside, it looks like this beautiful golden apple, but inside, it's a cold mechanical engine. Capital isn't being created here, it's just being reallocated from one part of the machine to another. Okay, so if that money was forced out of the semiconductor sector, where did it go? It has to find a new home immediately. Capital can't just sit on the sidelines. What we just saw was a forced migration, and now we can actually trace its path. Right here is where the outflow was activated. The money poured out of the semiconductor space, a sector that institutions now see as overcrowded and fully valued. The fantastic news wasn't a reason to buy more. It was the signal that the trade had reached its peak, at least for now. And the inflow, it was detected right here. That capital rotated into what the big funds see as an empty house, undervalued sectors like industrials and batteries. Not because their story changed overnight, but because they are so beaten down that they offer, quote, price merit. And, crucially, they're large enough to absorb billions in capital flow. All right, this is the most important part of our briefing. This is where we build the bridge between the Asian close and the US Open. What happened in Seoul wasn't just some local story. It was a live simulation, a preview of the capital flow dynamics that are now heading straight for the US market tonight. The vector is locked. This image illustrates the situation perfectly. Think of the semiconductor ETF, SOXX, as this massive, overcrowded cruise ship. The signal from Korea is that the smart money is quietly abandoning that ship. not because it's sinking, but just because there's no more room to move. They're jumping onto smaller, less crowded life rafts, like Tesla, which represent these undervalued sectors with more room to grow. And look, this isn't just a gut feeling. This is quantifiable. The correlation between the sell the news event in Korea and the likely price action for US semis is now extremely high. We're talking a row of approximately 0.75. This data strongly suggests that the previous highs for SOXX are about to act as a major resistance ceiling. Okay, so what do we do with this intel? We don't just analyze, we execute. Let's translate this flow analysis into a concrete, actionable playbook for the US session tonight. Here's the tactical checklist. First, for the Semiconductor ETF, SOXX, the key level to watch is the previous day's high. If the price spikes at the open but can't hold that level, that's your signal. Treat it as an exit liquidity event, a potential short opportunity. Second, for Tesla, we're watching the recent support floor. If that level holds, it confirms our capital rotation thesis, and that could open up a potential quick long scalp for a short-term gain. And finally, none of this exists in a vacuum. The single most important number for tonight is 25,850 in the NASDAQ 100 futures. This is the line in the sand. A confirmed break below this level means this is no longer just a sector rotation. It signals a broader market shift to a full risk-off regime. And that changes everything. So that brings us to the final question. When the big earnings numbers flash across your screen tonight and all the experts start talking, what are you going to be focused on? Are you watching the news or are you watching the flow? Because as we've just seen, they're telling two completely different stories, and only one of them shows you where the smart money is actually going.